Thanks for clicking. The London real estate market continued its downward slide throughout October, with price decreases all across the board. This according to the most recent release from the London St. Thomas Association of Realtors. Yeah, with the benchmark average and median price all dropping, London has now lost all of its average price gains that it had seen since January of 2021. Yet, London's Municipal Council is doing its part to prop the market up, launching a new down payment assistance program as a means of helping some home buyers get into the market.
I'm trying to help you out.
So what I want to do today is go over London's real estate data for the month of October, take a look at this down payment assistance program, discuss who is and isn't eligible, and then go over some implications. As we'll see today, London's real estate correction is showing no signs of slowing down, and we will obviously continue to track how the market fares on this channel. Make sure you click like and subscribe if you want to get those updates, but for now, let's get into this data. On to the data. First up, the benchmark price. The benchmark price is the price of a home that represents the most popular set of features, which was down in October. London's benchmark in September was $562K. That fell to $561,400 in October. So price is down $1,000 month over month, down about $45,000 since this point in time last year. And the average price was down as well, falling much more substantially, coming in at $615,000 in September, dropping to $595,728 in October. So the average price down about $20,000 since last month, also down about $20,000 since this point in time last year. And the median price fell substantially as well. The median price, that's where half as many homes sell over that price and half as many sell under. The median price in September was $575,000. That dropped nearly $10K to $566,500 in October. So the median price down close to $10,000 since last month, also down close to $25,000 since last year. With that said, the months of inventory measurement, the MOI, which measures if no more homes came to the market, how long would it take for London to completely run out of homes for sale, that tightened a bit in October, coming in at 5.9 in September, down to 5.0 in October. And then finally, the sales to list price ratio, the SLPR, which measures by how much over or under asking a home sells. So if the home is listed at $100,000, sells for $97,000, the SLPR would be 97, and that was up a bit in October. The SLPR came in at 97 in September, coming in at 97.2 in October. So on average, homes are selling for about 2.8% under asking.
You missed your chance.
So we have the benchmark price down $1,000. We have the average price down about $20,000. The median price down about $10,000. We have relatively less inventory sitting on the market than we had in September. And homes are selling for about 2.8% under asking. And these price drops are more than explained by the dismal sales numbers. Sales coming in at 410, the third lowest for the past 12 Octobers, combined with new listings coming in at 1,033, the highest number of new listings that London's seen for the past 12 Octobers, leading to active listings coming in at 2,036. Again, the highest number of active listings London has seen for the past 12 Octobers, meaning that buyers have an awful lot of buying power now. As always, finance conditions, home inspections, condition on selling your home. If your realtor won't protect your financial interests, can't protect your financial interests, get one who will. There's thousands upon thousands of them available. They'd be happy to have the business.
You can't insult them like that.
With all of that said, as London's market continues to correct, the city is stepping in to at least prop it up somewhat, offering a new down payment assistance program. What exactly is it? It's an interest-free forgivable loan covering 5% of the purchase price up to a maximum of $25,000. And as with anything, remember this is the government, there are some stipulations. This is a 5% loan. If you sell your home within the next 20 years, that principal has to be paid back, and any money that you gained on the sale of that home, the government gets 5% of that as well. So under the London program, if you buy the home right now for $500,000, 10 years from now you sell it for $600,000, you owe the government that initial $25,000 plus 5% of the $100,000 profit that you earned. And it's that second part of the stipulations that make this program very similar to the now defunct first-time homebuyer incentive that was at one point offered by the Canadian government, where the government offered matching 5% down payments in exchange for a 5% stake in the property. The program was wildly unpopular. As it turned out, those that had the 5% down payment already in savings weren't willing to give up another 5% of their home to the government in exchange for marginally more buying power.
Let's move in together.
But this program from London differs from the Canadian-wide one in that buyers don't need to have that initial 5% down payment. They don't need to have any skin in the game at the initial purchase. In fact, they don't even need to be first-time homebuyers. The major requirement is that they be renters in London. Now, as to exactly who qualifies, borrowers can have a maximum income of $95,000, $115,000 for a family. Assets can't exceed $100,000. They must be a renter in London. The home has to be owner-occupied, and borrowers must be pre-approved for the mortgage. And here's the key: they also have to have closing costs in cash. And it's that last part that's probably going to trip some people up, as most lenders require that borrowers have 1.5% available for closing costs. So on a $500,000 purchase, borrowers are going to have $7,500 sitting in cash to pay closing costs. That money has to come from either your own savings or as a gift, a non-repayable gift from an immediate family member. That money cannot be borrowed.
Here's what you do.
Further, there's also some credit requirements that aren't listed on the website. Since this program is offering a 5% down payment, that means that this mortgage is going to have to be default insured. By law, the lender is going to have to get default insurance from one of the major insurers like CMHC, Canada Guarantee, Sagan, etc. That insurance protects the lender in case of default, but the cost is borne by the borrower. So if the borrower doesn't pay, the lender gets reimbursed, and the borrower pays for this insurance.
I'll always help you.
And these guys, the mortgage insurers, have their own credit requirements as well. These requirements are not listed on the government website, requiring strong credit management history, meaning a minimum credit score of 600. And although a 600 credit score is necessary to obtain mortgage default insurance, it's not sufficient. There's a few other requirements as well. There can't be any active collections on file. Lenders, the insurers, prefer to see 2 active trade lines for the past 2 years, meaning 2 sources of revolving credit, credit card, line of credit, etc., as well as a minimum number of missed payments. Ideally, none.
You f***ed me.
Now, there can be some minor exceptions made, like if there's a collections from Rogers, as long as that gets paid off, it's possible to get a collection, but that 600 credit score is definitely a do not pass go. I've seen 599 credit scores rejected right at the outset. They don't even consider it. London says that funds are limited for this program and applications will be processed on a first come first served basis, and borrowers must be pre-approved for a mortgage to apply. I'm not really here to judge whether this is a good program or not. That's very much a political question, who gets what and how much. But as to what it will do to the market, I don't think it's going to do overly much, as the program even notes funds for this are limited. With that said, we do have the municipal government stepping in to add at least some demand to London's correcting real estate market, a real estate market that has an awful lot of active listings. Again, I can't stress this enough. Make sure you have those finance conditions, those home inspections in place. There's a very good chance that a house purchased today won't be worth its purchase price by the time that it closes, as has been the case for at least the past few months. We will obviously continue to track how London's market plays out amid all of this uncertainty. Make sure you click like and subscribe if you want to get those updates. But for now, thanks so much for watching.